Hey there, Kathy Eckhart here with the Zaft Lending Team, and we have another Zaft Lending report for you today. Pete, we're in a pretty cool place today.
We are. We are in the castle today in Franklin, Tennessee. Little history fact, this used to be kind of a speakeasy for Al Capone. So back in the day, between Chicago and Florida, this was a stop-off spot. And then, through the years, different owners, and then the current owner decided, hey, this would be a great recording studio. I think in the 80s he purchased it. It's a who's who that's actually recorded here.
Actually, there's some recording going on downstairs.
Yes, there is. So if you hear some drum background, that's what it is.
Gangsters and musicians. We actually can lend to anybody, can't we?
We can,
yeah.
Yes. Musicians, they've got a bunch of different sources of income. Is it W-2? Is it 1099? Is it K-1? You're kind of the non-QM specialist. We do a lot of that. But if we can fit them into the traditional box, they can get a little better rate,
right,
lower closing cost. And so, that's what I like about where we are, is we've got the local people, local ops to kind of look through that, figure it out, and kind of, okay, which way are we going to go? We're going to go traditional, we're going to go the non-traditional bank statement. But either way, we can get it done.
And we've had some great experiences, even just recently, with the non-QM space or unique borrowers that we've had to deal with. I know I've got a few stories. Tell me about one of yours recently.
We've got one now that we're working on, getting ready to close. Perfect example. He's got W-2s, he's got 1099s, he's got royalty income. So all those three different sources, and averaging them out and putting them all together and making them all work in a way that makes sense for everybody. And I know you've got a success story. You've got one that another lender turned down, looked like there was no hope, and you pulled it out.
Right. Kind of a Zaft Lending Team specialty, the asset utilization and asset depletion. Both you and I have touched on this, but again, people with unique income, if they've got assets sitting in an account, we can make that work, and we can make it work quickly. So I think, again, another advantage to all of that is us being local, with our underwriters local, appraisers local. So when we get into those difficult loans that we have, whether they're the musicians or athletes or just a self-employed borrower with a great CPA, we can make that work. And again, your knowledge and the collaboration that we have is a huge advantage.
I would totally agree with that.
So Pete, we had a podcast not too long ago about the shared appreciation, and you're actually working on a couple of those loans right now, aren't you?
I am. They're going well. It's a neat program. It's a way that the buyer can get a substantially lower interest rate. You're kind of in there for 3 years. After 3 years, you give some of the equity back that you've gained back to the lender, but in return, you get to be in a house that you probably otherwise wouldn't have been in, and
right,
keep that payment down where you're more comfortable with. And it's just 2% of the equity, so it's not a ton that you're going to give back per year. And for that, again, in return, you get a great house. And, little known fact that people don't realize is when your interest rate is lower, not only is it a lower payment, but you are paying more to principal. So the balance you owe at the end of that 3, 4, 5 years is also a good bit less, because more of your payment went to principal, less to interest.
I was going to say, because I know you're a numbers guy and you've worked through these numbers. So even though you're giving up some of your equity, and I say giving up with my air quotes, right, it's those other parts of the equation that you're talking about, right, that still our clients will come out ahead.
Correct. And the shared equity is just another example of another option we have to go with everything else in our arsenal. If there's a way to get you in the home, we're going to do it.
So it looks like 2026 is going to be an exciting year for us, and I can't wait to see how many people we get to help this year. How about you?
I cannot agree more.
Well, thank you again for tuning in to the Zaft Lending Report, and we'll be back soon.